You are watching Market Watch, the brief overview of the key events from the world of finance. Global financial markets continue to face increased volatility due to new trade measures imposed by U.S. President Donald Trump's administration. The introduction of a 25% tariff on imported cars has significantly impacted Asian stock markets. Japan's Nikkei index dropped by more than 2%, while South Korea's KOSPI hit a two-week low. The automotive industry, a crucial sector for Japan and South Korea, has been particularly affected, pushing some manufacturers to consider relocating production or raising prices. The US dollar has weakened slightly in the currency market. In contrast, the euro has strengthened, reaching $1.08, partly due to rising German bond yields. However, this upward movement remains within a broader local downtrend and appears more like a correction. The Japanese yen, despite declining in March, is closing the quarter with an almost 4% gain. Scandinavian currencies, such as the Swedish krona and Norwegian krone, have performed the best among G10 countries, as their central banks resist lowering interest rates. Trump's trade policies are raising concerns among European investors. After significant stock market growth in the first quarter, many investors are reconsidering their positions, fearing the negative impact of trade disputes on the region's economy. Major asset management firms are reducing investments in the euro and European stocks ahead of expected retaliatory measures from the US. The newly imposed auto tariffs have already led to declines in European stock indexes, particularly affecting German automakers. Meanwhile, in the US, Federal Reserve officials are voicing concerns about the inflationary impact of tariffs. Susan Collins, president of the Federal Reserve Bank of Boston, stated that tariffs will inevitably drive inflation higher in the short term. However, the long-term extent of this price pressure remains uncertain. Collins emphasized the need for a flexible monetary policy and expressed support for the Fed's decision to keep interest rates unchanged amid growing economic uncertainty. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.